Okay, cool. I think everything should be working fine. Once again, for those who are on the Vantage app, I wouldn't be able to interact with you guys so that much because we are all on the app. The chat box is moving like crazy. Every time there's a new chat, it brings me back to the bottom. So I would have missed whatever chat that was on the top. Okay, so hi. Um, I hope you guys understand for those who are on Vantage app especially. Okay, so once again, hi everyone. Welcome to today's webinar brought to you by Vantage. We're gonna do crisis and opportunity Black Swan events in trading. Okay, so how the Black Swan events are gonna help you guys and how you guys, hi Gula, how you can use it to your advantage. Just take note, the reason why I was a bit late today because my computer crashed. So these are not my original slides. My original slides was way. There were a lot more photos and whatnot. So I only had a very little time. So please forgive, like I know things don't look very aligned. I know the words are a bit small because I didn't have time to edit it in that short period of time. So please bear with me. Don't worry so much though, because the information I'm going to give you will be the same. It's just that the graphics on the slides may look weird, as in the pictures may look like it's not aligned because, yeah, I only had a very short period of time to come up with slides because my other computer crashed. Okay, so hope you guys understand. Hope you guys are not too particular about photos. Okay, I'm still gonna give you the information for today's webinar though. Okay, so let's move on to the disclaimer part. As you guys know, this is the usual part of this webinar. I do need to go through the disclaimer. The disclaimer, basically, I will stay here for a minute or two, but it's basically to remind you guys that this webinar is purely educational and nothing in this webinar should be construed as investment or trading advice. So please do your own due diligence before trading, all right? Just another risk warning, trading Forex and CFDs carry significant risk, especially if you are trading on margin. So please be careful, please be cautious. Even for me, as someone who's been trading for 9 years, coming 10 years now, I am still very cautious with the markets. I still use my 1% risk management. I still don't overtrade. I'm still scared because the market can take me out anytime. The market doesn't care who you are. It will take you out if you're not disciplined. Hi, Jamilu. I don't think the others can see your chat. So, Jamilu is saying, hi, Bob. Good day, everyone. I don't think you guys can see each other's chat, right? For those who are on Zoom. For those who are on the Vantage app, you guys will definitely be able to see each other's messages because the chat is just like public and it's moving like crazy. Okay, I'm gonna stay here for a minute while you guys read through the disclaimer and I'll continue in a bit. Okay, cool. I think you guys should be good with the disclaimer and I'm gonna move on now. Don't worry, there will be more than enough time to cover today's slides so that we will have time for questions and answers later. I am gonna move on to introducing myself now. So my name is Cassandra. You guys can call me Cass. I am an investment analyst at Everest Fortune Group and a prop trader for those who don't know what an analyst does. So Everest Fortune Group, which is where I'm from, is a research firm We specialize in a lot of back testing, research, forecasting, and basically just understanding the markets. That's basically our job, to understand the markets and to see where the markets are going and to forecast movements within the market and to understand different strategies and whatnot. Okay, that's my entire job as an investment analyst. On top of that, I am a prop trader. Oh, sorry, back to being an investment analyst. So the company where I'm from, which Vantage has invited us to do these educational webinars for you guys, Everest Watching Group, we have been recognized as the finalists for the best Forex and best equity research for multiple years running. That means we have been recognized like globally and in the industry as a group that comes up with very quality research and forecasting. Okay, so you guys are in good hands. On top of that, I am a prop trader. For those who don't know, what prop trading is. It means that I am funded by different companies to trade their funds. How did I get this funding? I had to pass a couple of tests. A lot of these tests required you to do 10% profit within the month. 10% profit to me is not that hard. I do it quite consistently, usually about 6 to 10 for me, quite consistently. A month is very normal. And how I do that is by using technical analysis and now combining a bit of fundamental analysis and whatever is happening in the world. Okay, last month I ended with about 8%. This month I just closed a 2% trade, so I'm in another trade. So if that goes well, I should be able to end this week in 5% profit. Okay, and we're not even at the end of the month yet, so it's so far so good. The whole point of me sharing all of this is so that you guys know that you are in good hands. I am someone who trades the market on a weekly basis, and I trade it a lot, and I follow the markets, and I follow the stuff that I'm sharing a lot with you guys. Okay, so you guys are in good hands. Please do ask me questions if you have any questions. The whole point of Vantage bringing these webinars to you guys is so that you guys have a place to interact with a professional trader and to ask questions and get your whatever challenges you guys are facing answered. And like, I know you can just Google the answer sometimes, but it's also to give you different perspective from a different trader's point of view. Okay, so let's move on. So our agenda for today is what is a black swan event? So I put like COVID, 9/11, the 2008 bubble crash as examples. So why these events reshape markets in days and not months, okay? It does reshape the market in a long term, but on a short term, it's definitely going to reshape the market. And that is important for us to know because it will help you make more informed decisions when you are making your investment decision making or your trading decision making. Okay, so then we're going to touch on safe havens versus high risk play during black swans and building a trading framework for unpredictable stocks. So once again, guys, the reason why I'm late today is because my computer crashed right before the webinar. I think it was like 10 minutes before the webinar. So I had to come. I'm using a different computer now. And I didn't have my slides, so I had to like rush in that 10 minutes to create slides for you guys. So please forgive me if the slides look a bit weird or things looks a bit misaligned or like you're like, hey, why are the words, well, some of the words, some are big, why are the fonts different? Okay, like these little things. Okay, please forgive me and please be patient. It still shouldn't take away the content for today though. The content will be the same. I will still be sharing the same content as the other side. It's just that the pictures and the alignment will be a little bit weird and different. So yeah, sorry about that, guys. Okay, so what is a black swan event? Let's start. So let's define a black swan event. So when a trader hear black swan, they usually think of chaos, okay? But a concept goes deeper. The term comes from Nassim Nicholas Taleb's book, The Black Swan, okay? Where he describes events that are highly improbable, unpredictable, but massively consequential. A black swan event catches everyone off guard. It doesn't matter who they are. They can be people who are very, very experienced. They can be analysts, people like me, investors, people like me as well, and even central banks. Okay, so everyone will just be caught off guard. So it defines normal forecasting models because it's outside the range of expected outcomes, right? I'll give you an example of a black swan event that affected me personally. So I used to trade a lot of cryptocurrency. At one point, I lost about $100,000. Yes, you heard that right. $100,000 US dollars in about 3 days because Russia attacked Ukraine. Okay, Russia attacked Ukraine. Yes, I did not use a stop loss for that because in that case, I was not I was not trading CFDs. Okay, so I was buying and holding, okay, for long term. Okay, that's an example of how these black swan events or all these unexpected events can affect you overnight. Okay, so in 3 days, I lost about 100,000 and US dollars, and yeah, it was bad. Because when the news happened, I wasn't on my computer. I wasn't following the news closely. I didn't have a stop loss because you cannot have a stop loss if you are buying things and holding them, right? There's no stop loss for that, right? So I lost quite a bit from that because I wasn't ready. I wasn't on the news. Yeah, I just didn't react fast enough. So these black swan events will hurt people, mostly investors. Okay, I think, can you guys let me know in the chat box, especially those who are on Zoom, are you guys here mostly like day traders or are you investor? Like for me, I'm a day trader, but I'm also an investor in the sense where I also hold long term. Okay, so if you are someone who only trades CFDs and you have a stop loss in place at all times, it shouldn't affect you that much, right? Because if something crazy were to happen tomorrow, you have your stop loss in place and you are safe, right? You are protected and you are safe. So you should be good. Okay, so a black swan event catches everybody off guard. Okay, think about 9/11, which happened on 2001. Markets halted, oil spiked, aviation stocks crashed overnight, or the 2008 global financial crisis when liquidity dried up and too big to fail turned out to be very, very real. And of course, we cannot forget COVID-19, an invisible virus that shut down the world economy in matter of weeks. The defining traits of the Black Swan events are rarity. It's something few people expected. It just happens out of nowhere. Okay, the extreme impact that it has when it happens. So it reshapes financial systems and behaviors. And in retrospective rationalization, people only explain it after it happens. When it's happening, people are just confused and they're just in shock. Okay. So in other words, it's not the event itself that kills portfolios. It is the surprise and the speed of reaction that follow. So yeah, so how I lost 100,000 in that 3 days is because my reaction speed was too slow. Russia was bombing Ukraine. What I should have done was quickly grab everything in my portfolio and exit the market, which I did not do. And I keep watching my portfolio go down, 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 like in a very short period of time. And that's when I'm just like, okay, I'm losing too much. I need to get out now. Okay, so if you're an investor, it is important for you to react fast during these events. Okay, Black Swan events follow a surprisingly consistent pattern in the market still, okay? They start with a panic phase, okay, which is the first phase. The investors dump risk assets and rush to cash, okay? That's what I should have done. I should have just dumped everything and just hold on to cash, but I didn't, okay? So you see equities crash, spreads widen, and liquidity vanish. The second phase is deleveraging. Funds face margin calls. They sell not just losing positions, but everything. Everything, okay? Even safe assets to cover exposure. That's why even gold and treasuries sometimes drop briefly during panic. So the third phase is intervention. Once a shock peaks, central banks step in, interest rate cuts and emergency lending, quantitative easing. happen. So policy announcement mark turning point because traders shift from fear to expectation of support. So then there is the fourth phase, which is recovery and realignment. Money rotates in new leader. After COVID, tech and stay-at-home stocks boomed. Okay. I don't know if I've mentioned this before, but I also have another business where I sell gadgets and tech stuff. Okay, so I'm talking about keyboards, speakers, green screen, webcams. Okay, during COVID, my business boomed like crazy. Why? Because everything was moving to work from home and everybody needed those accessories to work from home, right? You need a webcam to work from home. I need a webcam to do this webinar for you. So during COVID, a lot of those tech and stay-at-home stocks boomed a lot. But after 2008, growth names led. So after 9/11, defense and energy outperformed. So it also depends on what that Black Swan event entitles, right? Because after 9/11, for example, the country is very scared. So now they're increasing their defense. So you will see investment stock, like defense stocks and energy stocks going up like crazy. Whereas like, yeah, those, like you need to know the characteristic of the Black Swan event, and then you need to find out what the losers and the winners are. So that's exactly what it is. Okay, so for traders, understanding these stages help separate temporary panic from structural opportunities. Okay, so the key lesson from every Black Swan event is that risk happens very fast. You don't need to predict the next one. Nobody can. You cannot predict if tomorrow you wake up and the US bombs China, for example, or next week China bombs Taiwan. Okay, like that's just an example. You cannot predict any of this to happen because these are all usually done in secret and then it comes as a surprise. So you don't need to predict the next one because nobody can. What matters is resilience, position sizing, risk control, and liquidity management. During shocks, leverage kills faster than losses. Traders who survive are the ones who can stay in the game when volatility doubles overnight. That's why I always emphasize to you guys that risk management is the key to being successful in trading. Okay, if you don't have risk management, you don't have anything. Okay, you cannot stay and last long in this game if you don't have risk management. If you don't want to use a stop loss, I cannot help you in protecting your account because, yeah, but I mean, to be very fair, I actually personally know professional traders who don't use stop loss. And to me, that is not a risk I'm willing to take. If that's something that works for them, that's good. But I'd really recommend you guys using a stop loss because what if you guys were in my position where 10 minutes before I was going to start the webinar just now, my computer crashed? What if you are in a trade and your computer crashed? Your phone crashes, your Wi-Fi stop working, the electricity goes off, for example. Okay, these are just examples. So it's very important. Just use the stop loss. It's not going to kill you. It's going to protect you. Just use the stop loss. Okay, so focus on what you can control: reaction time, discipline, and capital preservation. Because after every Black Swan comes a massive realignment, new leaders, new opportunities, and the rest of valuation. So in short, don't fear the storm. Just prepare when the storm comes. Okay, so why these events reshape markets in days and not months? Okay, shock waves and speeds is, well, that's the main reason. So let's talk about why the Black Swan events, these rare chaotic shocks, don't take months to unfold anymore. They reshape markets in days, sometimes even hours. Because, okay, first of all, people are more informed now, right? The internet is in everyone's fingertips, right? Like, the internet is literally like even a child, a teenager has access to the internet. So whatever I can read online, a teenager or a child can read online as well. So information is readily available to everyone. That's why people are reacting way faster now compared to before. So the short version, it's because the world today is hyper connected, hyper reactive, and hyper leveraged. Let me unpack that. In the old days, say the 1980s, information took time to circulate. News had to go through television, newspapers, and formal corporate disclosures. That gave markets a kind of shock absorber, right? It takes time for information to get to people. Okay, so if bad news came out, it took days before it fully priced in. Fast forward to now, a single tweet, a headline, a government announcement can ripple through global markets instantly. Information is traveling fast nowadays. I can get information, I can get whatever information I want, in-depth, accurate information in a minute, just by typing on Google, just by typing in on ChatGPT. So when COVID lockdown happened in early 2020, traders didn't wait to see the data. Within 78 hours, the S&P dropped 10%. Within 3 weeks, the entire world entered a bear market. Why? Because information velocity is exponential. So you have algorithmic trading systems that auto-reacts to headlines and volatility signals. You have social media amplifying panic and speculation. You have 24 hours news coverage and real-time sentiment data driving mass behavior. So the modern market doesn't digest shocks, it absorbs them like an electric current. And when everyone's connected to the same current, a spark in one corner, like a new virus, a war headline, a bank collapse, can fry the whole circuit almost instantly. So another layer is globalization. Back then, a local event stayed local. Today, supply chains, financial flows, and investor portfolios are all interlinked. When Chinese factories shut down, it's not a Chinese issue. It hits the US retailers, the European manufacturers, the Australian miners, and the oil exporters all at once. They're all interlinked, they're all interconnected. So what used to take 6 months to ripple across economies now hits instantly because the flow of goods, data, and capital is completely synchronized. So if I have to tell you guys and advise to tell you guys need to stay informed. Because if you are not informed, someone who is faster than you, someone who is younger than you, someone who is on the computer before you will get the information and will react before you. And by the time you finally react, it's going to be too late. The money has already been made for someone else. Okay? So, and then it comes liquidity, or rather the lack of it. During normal times, liquidity feels infinite. You click buy or sell and your order fills instantly. But when fear spikes, liquidity evaporates. Brokers widen spreads, market makers pull out, and even safe haven assets suddenly get dumped for cash. That's why markets move so violently, not necessarily because everyone's panicking, but because there's no one left on the other side of the trade. Add in leverage, because modern portfolios used borrowed money, margin, derivatives. When prices fall fast, margin calls force more selling, which triggers more losses, a classic feedback loop. So when you combine instant information for everyone, global interconnection, and high leverage, you get a market that no longer bleeds slowly, it snaps. Okay? So now let's look at the timeline for reaction during a crisis. Okay, the first reaction is always panic and liquidation. Investors sell what they can, not necessarily what they should. It's not logic, it's survival. Okay, when a black swan event happens, when a panic happens, I'm not talking about people like you and I, right? Because you and I, we are trading on a very small account size. Actually, can you guys let me know in the chat box how big are you guys trading on? Like, is your account $1,000, 500, 10,000, 100,000? I do want to have a rough gauge of what's going on actually. For those who are on Zoom, not the ones who are on Vantage app, because the chat keeps moving, I will miss your message anyways. Okay, $1,000, three, uh, $300,000. Okay. $5,100. Okay, it doesn't matter. You can start small. $60. Okay. I actually, by the way, guys, to be a little bit more relatable to you guys, I'm actually going to start a challenge next month, which is in December, where I start my account at $500 and I want to see how fast I can grow that account from $500 to $20,000. Okay, I will let you guys know the results. I will start on the 1st of December and I will trade it until the 31st of December, and I want to see what my results are, and I will share it with you guys because I want this to be realistic for everyone, right? I don't want people to think that, hey, my account size is so small, I can never grow my account. Okay, so for the sake of this argument and for the sake of showing you guys that it can be done, I am going to start with a $500 account next month and see how fast I can grow it to 20,000. How long it's going to take me and what my risk and reward will be. That means I'm not going to be a swing trader anymore. I am currently now a day to a swing trader. I'm more of a swing trader, right? I only take one trade a week. Probably next month onwards, I'm going to be trading every single day just to fulfill this challenge. Yes, I will definitely be sharing my results with you guys. Hopefully everything goes well. I will be like keeping receipts, taking pictures of everything so that I'm gonna like take picture of my journey, obviously. Okay, so during 2020, let's continue, sorry. Even gold and treasuries dipped briefly because people needed liquidity now. Then comes the credit phase. Banks and funds start feeling the stress. Remember 2008? It wasn't the shock crash that broke the system. It was the freezing of interbank lending. When credit stops flowing, even healthy companies can't function. That's when you get the policy wave. Central banks step in, emergency rate cuts, liquidity injection, and fiscal stimulus, whatever it takes to survive. Okay, so those announcements usually mark the turning point because investors start pricing in the rescue trade. And what's wild is this all happens within weeks, not years. Look at COVID. Markets collapsed in February and bottomed out in March 23. That's the full bear and bull cycle in 30 days. Okay, it only took 30 days 30 days to go from full bearish to bullish. Okay, the same dynamic happened in the mini banking crisis in 2023. Silicon Valley Bank collapsed, panic spread, and the Fed stepped in all within 10 days. The drama all happened within 10 days. So things are happening, the drama is happening, but it's getting resolved fast as well. We live in an era of compressed time frames. It's like the market has no patience anymore because the people who are trading are you and I. Let's be honest, none of us want to wait to get rich like in 50 years, right? We want to get rich faster. Okay, so traders no longer say, let's wait and see how it plays out. They react first, think later, because algorithms don't wait. When you hear the market already priced it in, that's not a cliche. It's literally true. The market prices events faster than governments can respond. Okay, so from a trader's perspective, this speed isn't just risk, it is opportunity. In stable markets, everything grinds slowly, but during a crisis, price discovery becomes honest. There's no pretense, just fear and flow. If you can stay calm with when everyone else reacts emotionally, you gain a huge edge. So I'll give you an example of staying calm. Let's say it's during COVID. Let's pretend it's COVID. Let's say COVID happens next week. The market is definitely going to dip, right? People are going to throw all the cash, you're gonna see the markets drop. It's gonna drop and drop and drop. What are you gonna do? Your job is to wait for it to bottom out. Okay, and try your best to get in at the bottom. That's literally it. So whenever there is bad things happening in the world, your job is Well, I wouldn't say celebrate because celebrate is so bad, right? You don't want bad things to be happening either. But I will be very honest with you guys. Every time a bad thing happens in the world, I'm just like, okay, the market is gonna drop. It means that it's time to prepare my cash so that I can buy, I can go on a shopping spree. Okay, so opportunity will always arise whenever there is mishap. Okay, so um in stable markets, everything grinds slowly, but during a crisis, price discovery becomes honest. There's no pretense, just fear and flow. So if you can stay calm, right, while everyone else reacts emotionally, you gain a huge edge. So volatility means spreads widen, liquidity disappears, and technical levels get broken violently. But it also means mispricing becomes extreme. That's when disciplined traders can enter trades with asymmetric risk reward setups. So here's the mindset shift that you should have. Don't try to predict the event. You'll never time the next 9/11. We also don't want the next 9/11 to be happening anyways, or you can never know when the next virus is going to attack the world. You don't know when the next COVID is going to happen. So instead, prepare for reaction cycle. Okay. Ask yourself, how does capital usually move in a panic? So is it cash, the US dollar, the JPY, gold? It moves within all these asset classes because that's where people who fear will put their money in. So which sector gets hit first? Usually high beta tech, small cap, emerging markets. Those are the sectors that will get hit first. Those are usually the losers. And who benefits after the policy rescue phase? Infrastructure, defense, healthcare, or even tech. Those are the questions that turn chaos into clarity. And because these events reshape markets in days, not months, your reaction speed and flexibility are more important than your prediction accuracy. Okay, so trading in this era is less about who saw it coming and more about who adapted the fastest. Okay, so if you want to survive and thrive in the age of black swans, remember this: don't fight the storm, flow with it, right? If you cannot beat them, join them. Okay, because markets don't move slow anymore. They move at a super fast speed. And especially when there is fear involved, the speed increases by 10 times, tenfold. Okay. Okay, let's talk about where money runs when fear hits. We've talked about this many, many times when there is a risk of when the market is in a risk off sentiment. We talked about this many times in previous webinars, but let's talk about it again. Okay, so whenever a black swan hits, human instinct takes over because logic fails. Okay, human instinct will take over logic. Okay, so fear doesn't ask what's the PE ratio, where can I hide my money. That's why we call it a flight to safety. You literally see capital evacuating risky assets and crowding into safe havens, and it happens within hours. Okay, minutes to hours. The psychology is simple: preserve capital first, make profit later. We will make the money later when all of this is over. So what these people do is, while everything else is crashing, okay, you think about it, if tomorrow there's a war, for example, okay, um, okay, tomorrow there's COVID. COVID is another COVID, another wave of COVID happens tomorrow. S&P and all the major index are going to crash. Okay, that is almost for sure. We're almost certain that it's going to crash. So while it is crashing, while it's dropping and dropping and dropping, you take your money out of S&P and all the index and you put it into gold. So while all of that is dropping, gold is going up in price. So you're making money from gold. And then once it bottoms out, once you do your analysis, you do your research, and you realize, okay, I think the crash is over. You now take out your money from gold, which you already made some money from gold, and now you put it back into the index. Okay, that's how you move your money around to keep making money. right? That's how you move your money around. You need to react fast, okay? You really, really need to react fast. So the first thing that people will put their money is usually the US dollar. Okay, these are the usual main refuge. Even if America is the epicenter of the crisis, global investors still run to the US dollar. Why? Because it's liquid, it's trusted, and the world's settlement currency. In 2008, the US caused the meltdown, yet the US dollar soared because everyone needed dollars to repay USD denominated debt. Liquidity beats patriotism every single time. Okay, the second will be the Japanese yen and the Swiss franc. These currency are almost like automatic safety switches. Japan and Switzerland run consistent current account surpluses, meaning they own the world's assets instead of borrowing from it. So when global funds de-risk, they repatriate capital, causing the JPY and CHF to rise naturally. That's why you'll see USD JPY drop hard during market panic, even if Japan has its own economic issues. The third one, gold. Okay. The timeless safe haven. We all love gold. We all have gold in our house. I don't know about you guys. If you guys are Indian, for example, or my grandma is Indian, by the way, and she has a lot of gold. Okay. Or like if you are Asian, it is a culture of ours to buy and hoard gold for some reason. It doesn't matter. It can be like earrings, necklaces, rings, whatever, bracelets, right? I am Indian. Oh, okay. So Kumar is Indian, then you should know it is a culture of like ours. I don't just mean Indian, I mean Asians in general, to buy and hoard gold. Okay, so because it is a timeless safe haven. So when paper currencies and central banks lose credibility, gold becomes the final anchor. During COVID, gold spiked to record highs as real yields went negative. But note, in the first days of panic, even gold can dip because funds liquidate it for cash to cover margin calls. Once the forced selling ends, it rebounds as the ultimate store of value. Okay, so I mean, honestly, if you guys have extra cash lying around, go and buy some gold, but provided it doesn't get stolen, okay? My my husband sometimes asks me, should we go and buy a gold bar? I'm like, I don't even know if a burglar is gonna break into our house next week and steal a gold bar. So for me, I don't like tangible assets. I have everything in the markets. Okay, everything is digital on my phone where it is hard to hack. Even if you can hack me, I can and an IT investigator can probably track you down. Okay, eventually track you down. But if it's a burglar and you steal my gold bar and you run away with it, I don't know how I'm going to physically locate you. Okay, so for me, I like having my things in the market. Okay, so the fourth is US Treasuries. When yields fall and bond prices rise, that's the market screaming, I need safety now. Okay, during 2008 and 2020, treasuries rallied as investors ditched equities. The 30-year bond isn't sexy, but in a crisis, it's the most reliable hedge for institutional money. So the pattern is predictable. Panic, liquidity fight, USD rally, JPY CHF strength, gold bid yield collapse. If you memorize that flow, you'll understand how money behaves. Okay, maybe give me a moment. Let me just write this down somewhere. I didn't have this earlier on because yeah, you guys know what happened. Okay, so this is the normal market reaction. It starts with panic, liquidity fight, USD rally, JPY CHF rallies as well. It strengthens, and then gold bid and yield collapse. Okay. Okay, so now let's look at the other side of the coin. Who gets hit first when the storm starts? The first casualty is always equities, especially high beta tech and growth names. When fear spikes, valuation don't matter. Investors sell the most liquid positions first. That's why Nasdaq often drops hardest and harder than the Dow during panic period. Next is emerging market currencies and stocks. They are funded by carry trades. Borrow cheap USD and JPY, invest in high yielding markets. When volatility jumps, those trades get unwound violently. That's why you'll see USD, ZAR, USD, MXN, and USD TRY explode upwards during risk off. Then you have commodities, excluding gold. We're not talking about gold, okay? Everything else other than gold, oil, copper, iron ore, industrial metals, they all plunge. As a demand expectation collapse, traders don't wait for data, they price in recession immediately. And finally, crypto. In every recent shock, Bitcoin and altcoins have all behaved like high beta tech. The first to fall, the last to recover. It's not because crypto is bad, it's because liquidity is thin and institutions exit fast. The common thread, all these assets deepen on confidence and cheap money. When confidence evaporates and liquidity shrinks, they go from leaders to liabilities overnight. So when you're watching markets and you see USD and gold rising while tech and oil fall simultaneously, that's your real-time confirmation that a black swan shock is unfolding. Okay, the last part I want to touch about this is that as a trader, what we actually need to do when this chaos starts unfolding, first is to stay liquid. Okay, you can either put your money in safe havens or you can stay liquid. For me, I like to stay liquid, okay? I like to stay liquid in case I just want liquidity. So reduce your position size and avoid over leveraging for sure. In a black swan, the first rule is to survive. Cash is a position. Cash is king during a black swan event. Okay, secondly, don't try to predict bottoms. Let safe haven flows stabilize first. Once you see USD and gold plateauing while VIX starts to ease, that's your signal the panic phase is probably ending and you can slowly rotate back into the risky assets. Third is to watch intermarket signals. If the dollar strengthens but gold fails to rally, the market is not fully in panic mode yet. Okay, why? Because USD and gold usually will go up during a panic. So if both soar together, that's a sign of real fear. If oil and equities recover together, the risk on sentiment is returning. Okay, fourth, use hedges. You can short indices like Nasdaq CFDs, to offset equity exposures or hold small gold positions as crisis insurance. Professional funds don't go 100% cash. They balance exposure and you should too. You should definitely have a balanced portfolio. If you have $1,000, you should not put $1,000 in trading. Okay. If you have $1,000, you should put $100 in trading, $100 in something, $100 in something else, $100 in buying crypto, $100 in buying something. Okay, because you should always diversify. Please, please, guys, I'm begging you guys, diversify. Don't burn your account. Don't get poor trying to get rich. Okay. Finally, embrace volatility as an asset class. You can trade VIX-related products or volatility breakouts on major pairs. When everyone else is afraid of big swings, that's when risk-managed opportunity lives. The goal isn't to avoid storms, it's to navigate it while others are blinded by fear. Safe havens and risk assets are just two sides of the same coin. Your job is to know when to flip it. hold on. Um, okay, let's go into the last part of our. Oh, I need to get rid of this. Sorry, guys. Do I get rid of this? There you go. The last part of our webinar. Which is building a trading framework for unpredictable shocks. Okay. Okay, here's the truth about trading through black swans. You'll never see them coming. You won't get an alert that says crisis starts in 3, 2, 1. Okay, so by the time you realize what's happening, markets are already in chaos. So instead of trying to predict, the goal is to prepare. Okay, so what separates seasoned traders from everyone else? They don't spend time guessing what the next black swan will be. They build systems that allow them to survive any black swan. Think of your framework like an emergency drill airlines use. They don't know which part might fail mid-air. Oh, by the way, if you guys didn't know, I used to be a air stewardess. I used to be an air hostess, and we do get trained for emergencies. Every year we need to get retrained for emergencies, but we don't know when the emergencies are going to happen, but we are always prepared, right? We are always on our toes and we're always ready if an emergency happens. Okay, so that's the same mindset that you guys should have as well if you, as an investor, as a trader. Okay, so when emergency happens, you will know what to do. So in trading terms, that means having defined rules. The first one is to know how much you risk per trade, what your stop loss tolerance is, and when to cut exposure, what assets acts as your safety nets, and when you have this framework, panic doesn't control you, process does. Okay, again, if you're always using a stop loss, always using proper risk management, there is never going to be a surprise in trading. Trading is as boring as it can get if you always have a system in place. So let me share with you the simple but powerful four-pillar framework that most professional traders rely on when volatility explodes. Okay, the first one is liquidity. Always know how much your portfolio is in assets you can exit quickly. So if you can't sell it during a crisis, it's not really your money, right? Because it's not really your money. That's why funds and smart retail traders keep a portion of their equity in cash or highly liquid instruments like USD or short-term treasuries. Okay, the second one is risk control. This is one sound obvious. This really does sound obvious, right? But it's the most ignored. During calm markets, leverage feels safe, but in Black Swan, it goes like gasoline on a fire. You can survive being wrong, but not if you're overexposed. Keep risk per trade small, okay? 1% is what I always do. I never, ever, ever, I cannot emphasize this enough. I never risk more than 1%, but that being said, I will be starting on a small account next month, right? Like I said just now, in December, I'm going to try trading on a $500 account and see how fast I can grow that into 20,000. I think because the account is going to be a little small, I can understand why taking 1% per trade will take me forever to hit my target. Okay, so if I'm taking 1% per trade, I'm basically risking $5 per trade. And if I win that trade, I'll make $15, for example. Okay, so that might take me a while. So for that, because it's a small account, I'm willing to go as high as 5% per trade. Okay, but that's it. Nothing more than 5%. And 5% is really, really pushing it and really, really making it like taking a lot of risk. So when volatility spikes, tighten that even further. And remember, there's no such thing as too early to cut losses, okay? Now, pillar three is correction awareness. Most people think they're diversified until everything crashes together. Your goal hedge might fail if you also hold tech and high beta currencies that collapse at the same time. Before the storm hits, understand what's actually correlated. For instance, during panics, almost all risk assets move the same way, down, and safe havens move the other way, up. So you want the exposure that actually behaves differently, not just looks differently. Okay, the fourth pillar is adaptability. This one's actually psychology. You must be able to change your bias fast. Okay, I think the only one who's ever seen me trade here is actually Jamilu. So Jamilu follows my webinars quite closely and my work quite closely. But if you guys have ever seen me do my analysis or have seen me chart, you know that every time I go on the charts, I erase my previous analysis. Let's say the last time I did analysis, it says buy here, stop loss here, and take profit here. Every single time I come onto the charts, I erase everything and I rechart it again. Why? Because I do not want to have a bias from my previous analysis and I want to see the markets in new lens. Okay. If I reanalyze and I see the exact same thing again, that means my analysis is sound. But if I reanalyze and I see something else, it means that I cannot be biased and I need to change my bias because the markets don't care about your bias. They are going to move whether you are biased that it's a buy or sell or not. It's going to move. Nobody cares about your bias and nobody cares about your feelings. Okay, so that's why definitely don't have bias. So if your plan says trend continuation, but the market shifts into panic mode, you need to pivot instantly, no ego. Okay, because black swans don't care about your forecast. They reward traders who react faster, not those who were right first. This framework isn't glorious, but it's what keeps you in the game long enough to catch the rebound after the storm. Okay, so now let's talk about what comes after the panic. When things start to stabilize, that's when most traders freeze because they're either traumatized from losses or too scared to re-enter. But this is actually when opportunity begins. Use a crisis checklist, okay? Journal your reaction and backtest volatility and reframe chaos. Okay, so what do I mean by having a crisis checklist? Have a written process of what you'll do in a panic mode, reduce leverage, check liquidity, review correlations, have a cheat sheet checklist, and rebalance into safe haven. So other than Jamilo, again, I think the rest of you have never seen me trade before, but I have a cheat sheet checklist that I use before I do my analysis. I always have a checklist that I use, and every time I'm confused, I Google the answers. Okay? You need to journal your reactions. Every Black Swan teaches you something new about your psychology. It's not just during Black Swan. You should be having a trading journal. Did you overtrade? Did you freeze? Did you exit too late? Did you use the proper risk management? What did you do? And that's the data you refine for the next time. Okay, so you need to simulate trades under high VIX periods. This builds comfort around fast-moving markets and prevents paralysis. Okay, and don't see volatility as the enemy. It's simply information moving faster. Traders who interrupt it correctly get paid for their composure. The bottom line is this: black swans will always come. We just don't know when and what shape they'll take, right? But the traders who last are the ones who use unpredictability into. So this builds systems that survive uncertainty, not just trends, because in a world where shocks are inevitable, resistance become the real edge. Okay, I always say trading is not a sprint. I always say trading is a marathon. I say this all the time, every single time. Okay, so all right, guys, that brings us to the end of today's webinar. Okay, if you guys have any question and answers, do ask me. Okay, our discussion on the crisis and opportunity of the Black Swan events in trading. We've covered what these events are, why they shake markets so violently, how safe havens behave, and how to build a framework that keeps you alive when everything else is falling apart. Now, I did say that if we have time, we can do a Q&A. We do have a little bit of time left. Oops, sorry. Give me a moment, guys. Let me pull back my slides. We do have a little bit of time left. So if you guys... Oh, I did it again, sorry. If you guys have any question, just shoot me in the chat box. I'm gonna stay in that last page so that you guys can go on the social media. You can get connected with Vantage through Facebook, Instagram, X, LinkedIn, and Telegram. I'm just leaving that there while you guys ask me the questions, if you guys have any. Is it a good time to buy crypto or wait? Is next Black Swan is coming? Okay, we don't know when the next Black Swan event is happening. So is now a good time to trade crypto? It's always a good time to trade crypto, but the whole point of, I mean, a lot of what we're focusing on today's webinar is to emphasize that when a Black Swan event does happen, that you are prepared. But right now, yes, you can be trading crypto if you want to. Crypto is always a good time. I think it's currently dropping right now, if I'm not mistaken. Ethereum and Bitcoin should be doing a pullback right now, and you can wait to get in for a buy. Okay, so how do we actually know if it's a Black Swan event or just a normal market reaction? Okay, that is a very good question. A normal correction usually builds up over weeks. Okay, technical levels still make sense. Okay, if the news isn't something crazy like war or like terrorist attack or whatnot, or like COVID, a virus that's gonna shut down all the borders. Okay, and the technical level still makes sense. Volatility rises gradually, and the news flow is predictable. That's usually just a normal correction. A black swan, on the other hand, feels sudden. It's a shock. You see a complete breakdown. It's usually like a whoa moment, or like you're just in shock. Okay, you see a complete breakdown in correlation. Gold and stocks will both fall first. Spreads blow out and headlines dominate every asset class. So if it feels like the market reacting faster than you can process, that's your sign it's not a correction, it's a shock. Okay, so should I close all my trades when a crisis happens? It depends on your exposure. If you are using proper risk management, you don't ever need to close your trades no matter what, right? Because if you are wrong, you just get stopped out, right? If you're using stop loss every single trade, you don't need to be worried about anything. Okay, so I don't really see any other questions. I think that's about it. So since you guys don't really have any more questions, let's wrap up today's webinar. Thanks guys for joining. I will see you guys in 2 weeks. Sorry, not in 2 weeks, next week. I will see you guys next Tuesday. We're going to be covering another interesting topic. Okay, so I'll see you guys. Take care. And yeah, thanks for joining my webinar. And I hope you got something valuable out of this webinar. And at least, even if you're not going to use it in your own trading, you feel like today's topic is cool or at least informational. Okay, that's all I have for you guys. Bye, guys. Take care. See you guys in a week. Bye. See you on the 500 challenge. Yes, I will update you guys early January on how I go. I will start on the 1st of December. I do want to try this because I've had attendees. I mean, not just you guys. I have like other people ask me like, okay, I will never be able to make the kind of money that you make um because your account is so big. That is true. I totally understand where you guys are coming from. I trade on a more than a $300,000 account. It's almost $500,000 account. So a little bit of win for me is a lot of profit, right? 1% for me is like $3,000 or like $5,000. So I totally understand what you guys are saying. I hear you. So I am going to put myself in the position where I start with 500 and I see how long it will take me to grow that account to whatever it is. Okay, so I'll try my best. Send your channel details, I will follow. Oh, I don't have a channel, but I will record and take picture of everything. I will record the journey so that if I do plan to start a channel next time, I can upload it there. Okay, bye guys. Take care. See you guys soon.